What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. TSLY ETF is the monthly dividend ETF that everybody's watching, buying, and taking a risk on. I did take a risk on these guys, and I may take a bigger risk if I like the income for the next month of August. So I'm going to go over these guys. I'm going to show you my most recent income with these guys. And I'm going to show you my dividend investing strategy with these guys. So I'm going to explain to you why I'm holding, why I'm reinvesting the dividends, and the potential plan will be revealed to you next month if everything looks good on my M1, or excuse me, for my M1 Finance dividend portfolio. I'm telling you, this is something that is not financial advice. This is for entertainment purposes only. Disclaimer in the description. Do not take this in any form of financial advice. This can really blow up in my face. I've had, what is really, I mean, the biggest one is probably Rich Uncle's. That thing blew up in my face completely. This move could. I'm just telling you, do not take this in any form of financial advice. I seek advice from a investment advisor, because I'm going to tell you this is something that is really risky, something that is really potentially can really destroy your portfolio, and you can lose a lot of money. So this is something I'm taking a risk on. I have the finances to do it. Let me tell you, I've taken a lot of risks in life. I dropped everything, went into accelerated nursing, paid $4,000 in cash, and really didn't work. I was like a privately paid sitter, became a registered nurse, took a risk on RN BSN, and I'm taking a risk in NP school. And, you know, I'm taking this big risk in travel nursing. They can drop me in 5 seconds. So I have the resources to help me if this blows up in my face. This is why I'm taking this calculated risk. I'm going to probably reveal that to you next month. And I do feel a little confident about it, but it's really risky. I'm just telling you. So let's go over this ETF first. And then, like a lot of you guys are new, so, you know, we're going to definitely touch base on these guys a little bit. I'll show you how many shares I own, how much money I've made, and my strategy with E-Trade right now, which may really change an M1 Finance as well. But that's going to be something that's going to happen. I'm just going to tell you with a potential plan, things look well, going to be added to M1 Finance. And it's going to be big. It's going to be really big. So let's check this ETF out right now. So right now, TSLY ETF is sitting at 1652. It has not beaten the S&P. Do not expect it to beat the S&P. Do not expect it to beat Tesla stock. This is option income strategy. So I'm going to go over these guys on their website. I just wanted to do a quick stock analysis for you. And you know, you see the decrease in price per share. Again, this is a high yielder. Don't expect this dividend to eventually beat Starbucks or anybody like that. I'm just showing you straightforward what these guys are about. I'm going to go on their website real quick and go over these guys as a ETF, because there's a lot of things that people need to understand, because a lot of you guys are new to this channel. So I'm going to go over this. And I'm on their website right now, the YieldMax TSLA Option Income Strategy ETF, known as TSLY. It's an actively managed fund that seeks to generate monthly income by selling, writing call options on TSLA. TSLY pursues a call strategy that aims to harvest compelling yields while retaining cap participation in the price gains of TSLA. So there's a few things. The fund does not directly invest in TSLA. Investing in the fund involves a high degree of risk. Just letting you know. Single issuer risk. They also say that on their website. Issuer-specific attributes may cause an investment in the fund to be more volatile than a traditional pooled investment, which diversities risk the market generally. The value of the fund, which focuses on the individual security of TSLA, may be more volatile than a traditional pooled investment or the market as a whole, and may perform differently from the value of a traditional pooled investment or market as a whole. The fund's strategy will cap its potential gains of TSLA shares if they increase in value. The fund strategy is subject to all potential losses if TSLA shares decrease in value, which may be offset by income received by the fund. Fund may not be suitable for all investors. The distribution rate, I'm just going to go over this, is the annual yield an investor would receive most recently declared distribution, which includes option income remain the same going forward. The distribution rate is calculating by multiplying an ETF's distribution per share by 12 and dividing the resulting amount by the ETF's most recent net asset value. The distribution rate represents a single distribution from the ETF and does not represent its total return. The 30-day SEC represents net investment income, which excludes option income. The other thing is all YieldMax ETFs have a gross expense ratio of 0.99%. That's pretty much 1%. The distribution, okay, right here, may include a combination of ordinary dividends, capital gain, and return of investor capital, which may decrease a fund's net asset value and trading price over time. As a result, an investor may suffer significant losses to their investment. So just be aware of that. So we're going to look over this. They have a lot of shares. The other thing I want to go over is their distribution. They hit 106. That was the biggest they've ever done. 1 month they hit 44 cents. Another month they hit 80 cents. They've been pretty consistent from 99 cents, in the 90s, which is good. The other thing with these guys is, I mean, for me, honestly, I'd be happy if they hit 50 cents or above. That's just my thought process. Hitting 50 cents or above. So, again, these holdings, none of it is Tesla stock individually. It's United States Treasury, NTS, Tesla call options, Tesla US right there. So you got these call options. So nothing of it is Tesla stock. So I just want you to be aware of that. So right here, this is huge, 106, $1.06. I'm going to jump to E-Trade real quick and show you how many shares I own and what I'm doing right now. Okay, so right here on TSLY, I have a total of 174.788 shares, which gives me an estimated income of $186.34 with the 106 dividend. So this is not always going to be guaranteed with this one. The other one I like is QYLP ETF. That's another one. I'm hoping I can get that one integrated in M1 Finance because I want to use that income from QYLP to buy my quarterly dividend stocks. The thing with TSLY, okay, is the monthly dividends can be very powerful for my M1 Finance dividend portfolio. The thing is, what I may do is get a lump sum of cash. I kind of call it like with medications, a loading dose, and then like a maintenance dose. So a loading dose or loading sum of money into M1 Finance. I haven't considered how much money I'm going to throw in or what I'm going to do yet, and then use this income here to jump into M1 Finance. So that way I'm giving basically monthly income and throwing that in TSLY. So I'm going to maybe use the income here to throw into TSLY each month. That's one thing I have an idea on. The other thing I have an idea on, obviously KLIP and these guys, is just either consider having these guys reinvesting, which I'm going to probably do, and eventually getting to the point where I load up on enough shares with these guys to make about 600 a month, and then start throwing that into KLIP. And then once KLIP gets loaded up, then start doing a domino effect. That's one thing I considered. But the biggest thing that I have been begging on my hands and knees pretty much on M1 Finance and messaging them is to add KLIP, APLY, NVDY, and these other option income strategy ETFs to get them on M1 Finance so that I can use that monthly dividend income to buy dividend stocks like Starbucks, like Kroger, like ones that I've been loading up on, like Target, because that the potential, if I make 500 a month with this passive income, okay, just with TSLY, and I have that in M1 Finance, I mean, my gosh, I can load up on a lot of these dividend growth stocks, load them up, and then I'm also dollar cost averaging each week. And then it could get to the point where I don't have to put any more money in, and then these guys are doing the work for me. That's one thing that I'm highly considering. I don't want to start throwing the money in that. I got student loans. I don't have like a lot, but I want to do that. I want to distribute my money also on Fundrise, which is doing pretty well. So I want to distribute certain things into other certain things. I like to have a diverse portfolio. And the thing is, these things, there's no guarantees. I'm telling you, I'm taking a big risk potentially with these guys. And I never give financial advice. This channel is not for any form of financial advice for entertainment purposes, only as I have my disclaimers in the description. But potentially using this for serious income is something that I can start doing. And the thing that really excites me also, look at Arbor Realty Trust. It's sitting at $253.84. And just the estimated income, I'm right now, as an estimate, making certain months because of TSLY's income, which is not always guaranteed. This is just 600 on E-Trade. Now just wait for M1 Finance when I'm starting to really load up with those guys. So I'm just letting you know that dividend snowball effect is kicking in, but potentially with TSLY and KLIP and all these other option income ETFs, I mean, there's a few good ones which I need to go over as well. That would put me at phase 2 for the dividend portfolio. In phase 2 for the dividend portfolio, I'm going to call it 5 phases. Phase 2 is this strategy may jump everything to phase 2 because, I'm putting in money. I'm already making really good dividend income. And now again, TSLY in the long run, you have stocks like Target, you have stocks like Target, Starbucks, Kroger. Those dividends will probably, again, I'm not giving financial advice. I'm estimating just based on the dividend trends that they can overcome TSLY in income and the dividend growth and dividend snowball effect is a lot more powerful when you buy and hold really good dividend stocks. So I'm going to jump to my purchases today. I actually sold another dividend stock. I have a big thing that I need to go over with you guys, why I sold certain stocks. I'm going to explain my rationales to you guys and then go from there. So we're going to jump to M1 Finance, and I'm going to conclude everything. And I'm going to tell you, as a dividend investor, I'm going big or I'm going home. And I'm telling you that the people who have done extremely well in the past with their dividend portfolios, they went big, they dollar cost average, they were frugal. I mean, you look at Lanny with Dividend Diplomats, I mean, he's going big. You know why? Because he's going all in. Going big or he's going home, and he's going big. So, a lot of these people, Gen X dividend investor, there's just so many dividend investors that are rolling because they're going big. If you don't go big, you're going home. So I'm just telling you right now, this is what I plan on doing. I'm going big right now. So I got shares of Wendy's. I've spent $316.21 in them. Kroger, $69.09. Target, $61.99. Fidus Investment Corp. I'm going to do a video on these guys probably next week or so. Trying to cram in assignments, which is like a lot. So I can't wait to graduate. Starbucks, $82.78. And Fifth Third Bank Corp, $14.71. So with Wendy's, I got 14.51 shares. Kroger, I got 1.4 shares. Target, I got almost half a share. Fidus Investment Corp, I got 34 shares. Starbucks, I got 0.80 or almost a share. In Fifth Third Bank Corp, I got like half a share. Then I got Bank OZK. I got about almost half a share. Then I got T Rowe right here. Close to a quarter of a share. So those are my big buys, and I'll go over my sell next week. I'm going to try to get these videos in. It's just a lot all at once. So normally I post like 5 or more videos a week, but I just wanted to go over this with you guys. And there's 3 dividend stocks. The dividend growth wasn't there. That's what I didn't like. And I'll explain to you my rationales. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I think I explained enough times. This is not financial advice for entertainment purposes only. Disclaimer in the description. Don't take this in any form of financial advice. I am not a financial advisor. Seek professional advice from your advisor. Don't look at me. Don't tell me what you should buy. I'm not going to tell you. I'm going to tell you straight up. I don't give financial advice. You guys take care and have a great weekend.